Instead, we will negotiate fair bilateral trade deals that bring jobs and industry back onto American shores.
I think most people think that Trump is biting off more than he can chew if he decides to do something about the US trade deficit. Alvin Baker, Informa Global Markets. Donald Trump's advisor claimed the euro was grossly undervalued, accusing Germany of unfairly profiting from a low-value euro. So, Alvin, how closely will German GDP data be scrutinised this week?
Obviously, the Trump team have made this accusation, and it has put extra scrutiny on German data. Though for quite a while, German GDP data has been quite sort of taken in its stride by markets. It hasn't been a major market mover for some while, having sort of kept on growing at a steady 0.3 to 0.4 quarter-on-quarter basis for the whole of 2015 and 2016 to date. So it would have to be a very higher than average number to perhaps raise the ante a little bit more. Yes, we could get more jaw-boning, but it's very difficult to see how the Trump's team can single out Germany when really it has a similar dynamic trade deficit with many other industrialised trading partners, and it would open up a huge can of worms. I think in this case it's more Trump's team barking rather than the bite what we need to be worried about.
Now, these comments drove the euro to spike to its highest level since November. So are you expecting this week to be another volatile week for the euro?
The euro didn't like its price action much above 108, even when it had several different factors and impulses in its favour. And I think maybe the market is still looking at interest rate differentials and future interest rate widening, and that doesn't stand in favour of the euro. If anything, with the central bank's policies on opposite paths, I think getting over 108.50 is going to be pretty difficult, and I can see maybe a 3-cent range between 105.50 and 108.50 holding until the ECB decides that it's going to make a decision on tapering. Also, on the other side of the coin, we've got the US Federal Reserve still looking maybe to hike more than the market thinks it will do so, and that's why Yellen's testimony next week will be the main market driver for euro-dollar.
The newly appointed US president has drawn a focus to US trade deficit as a key indicator of trade deals with neighbouring countries. So, what are you expecting from US trade balance data this week, and what could the implications be?
Yes, this figure now has come back into the limelight, having spent quite a few years relegated by other US metrics. Talk of a protectionist lurch with new tariffs or even border adjustment taxes would change the dynamic if the figures were to deteriorate. But again, I think most other people also think that Trump is biting more than he can chew if he decides to do something about the US trade deficit. The main reason I say this is because the US has nearly a deficit with nearly all of its major trading partners, and how it can pick and choose one or two countries and single them out for any protectionism is going to be incredibly difficult to implement. And really, it's the main reason for the trade situation is the fabric of the US economy. It has an insatiable demand for materials, finished goods, and sucks in so many imports, and it's not really that side of the equation it can do much about. Domestic demand will continue to drive imports, and as I said before, with the euro, it's very difficult to see a much further weakening in the currency on the back of the central bank doing what they have to do. So a lot more jawboning, but that's about it. I think they might just have to grin and bear it and try and tackle any imbalances with more aggressive fiscal policy and new lower taxes and see if that helps, rather than go on the attack and cause a lot of antagonism with its trading partners.
Well, Alvin, thank you for your insights. That's all from me, but Dukascopy TV is uploading content daily, so keep clicking back.